from the entire team here at ET Now. Hi Pankaj, good afternoon. I believe we have the management of JSW Energy with us.
Right. Also the result season in full swing. The likes of SPR will be declaring, as you said. The management at JSW Energy is now with us. Mr. Prashant Jain, Joint MD and CEO at the company. So firstly, thank you so much for taking out time for us. Can you talk to us about the numbers? What were the key developments? What was the realization in the power sector in the quarter gone by?
Revenue was up by 15%, net generation went up by 9% because of very good performance by all the plants, because plant load factor at all the plants were much higher. Interest cost was down by 22% and profit after tax was up close to 6% at 317 crores. So all in all, very good quarter and very good business environment what we are seeing.
What were the PPA signs? Any updates on the existing PPA?
Yeah, that is a very good thing. You know, in last 6 quarters, our PPA of portfolio of the long term went up from 63% to 80.5% till end of this quarter. During the quarter, our PPA portfolio increased from 75% to 80.5%. And with this now we are only open for 19.5% capacity, which is in the merchant market, which is also a very interesting mix for us at this point of time. Given the merchant volumes are going up and realizations are going up, it's a happy situation for us to have 20% merchant portfolio at this point of time. And just to give you a flavor that during the month of October, our PLF was, more than 95% at both our merchant plants in Ratnagiri and Vijayanagar. So good situation all in all.
Prashant, good afternoon, and here's wishing you happy Dhanteras as well. Let's look at your earnings once more, and I want to understand what's been the impact of the rupees depreciations on JSW Energy. You know, you folks do import coal. So what's been the impact of that on the P&L?
Yeah, our cost of fuel goes up, but in terms of our PPAs, it's totally passed through. And in terms of the short-term open market, we certainly look at what is our cost and what are the prices. And to just give you a color that you saw the power prices during the first 6 months was close to 4 rupees. And during the month of October it was 6 rupees on an RTC basis, so it very well covers the fuel cost even for the imported coal, where the index prices are higher and rupee has depreciated. All in all, it's a good situation for us.
Okay, your stock is down by about a 2% in trade, so I will have to say that maybe some of it has to do with the earnings. There have been coal availability issues that JSW Energy has had to grapple with. On top of that, you've got the rupees depreciation. We just discussed that. What arrangements have you made as far as coal goes, and how bad was it, if at all, in the quarter gone by?
So let me put this into the perspective. Actually, during the quarter, the power demand went up by 6.9%. And out of that portfolio, only the thermal generation was up 2.2%. This is primarily because the coal dispatches from Coal India to thermal plants went up by 2.93% only. And because of which the plants which were based on the imported coal, they were running at much higher PLF, and that was also reflected in higher imports during the quarter. During the quarter, the coal imports went up by 44%. So it's a very interesting situation because of less availability of coal and having a critical stock at close to 28 power plants in India is driving merchant prices much higher. If you look at current financial year, merchant prices were close to 4 rupees for first 6 months. And which is in contrast of 2016-17, it was 2 rupees 42 paisa, and in 17-18 it was 3 rupees 26 paisa. During the October month it was 6 rupees on a RTC basis. So primarily the imported power plants, they are getting a fair bit of a good share, and they are importing more coal and running at higher PLF.
If you just look at the PLF across your plants, what has been the PLF? Can you tell us about the trend in PLF going forward expected in the current quarter?
So, in case of Ratnagiri, it was deemed PLF was 68% as compared to 61% previous year in the same quarter. Vijayanagar was 52% as against 42%, 43% previous year. Raj West in Barmer, it was at 86% as compared to 83% previous year. And in case of hydro, it was 95% as against 92% previous year. So we are looking a better PLF in time to come, because the sector is growing rapidly, the demand is growing. Another interesting thing which I just can give you a color is that we did a very good study. In the last 3 years, the power demand went up by close to 17%. In absolute billion units. As against that, the capacity addition was 22%, but that is primarily the capacity addition in case of the renewable sector. But if you look at the capacity addition on a plant load factor basis, it was only up by 8%, and on a PAF basis, plant availability factor basis, it was 12%. So what you are seeing is that the capacity addition is not taking place on a PAF basis or PLF basis as compared to the demand increase. That is what is driving a better PLF utilization for the existing capacity. And also, if you see the thermal plants, only the state and central sector, they saw a higher PLF during the first half of this year as compared to the previous year. The IPP in the private sector, their PLF has went down, and primarily that is because of the shortage of coal. So under such situation, the plants which are based on the imported fuel, they are big beneficiary.
Thanks so much, sir, for taking out time for us.